Qualcomm results are out. That stock is higher by about 4.5% initially. Let me give you the numbers. It's a beat and a raised quarter. Fiscal Q2 revenue came in at $9.39 billion versus $9.34 expected. Non-GAAP EPS at $2.44 versus $2.32 expected. The guide is also above for Q3. Qualcomm guides to a revenue midpoint of $9.2 billion. That's better than $9.03 expected. EPS midpoint of $2.25 plus or minus 10 cents versus $2.18 expected. I spoke with Qualcomm CEO Cristiano Amon about the results. He pointed out strength that Qualcomm saw in the premium tier Android in China, which is interesting given all of the trouble that a number of U.S. firms have been having in China. I'll say Apple specifically, which of course is premium but is not Android. So we'll get some more color on that. Also, strengthen the automotive business. So in the IoT segment, one of the growth areas is automotive, and they did turn in $583.3 million of revenue there in an automotive alone. That's a little bit separate from IoT, but that $583.3 million. That Qualcomm had said that last quarter was a bottom for that business, and indeed this is 9% above that. In the IoT area as well, they were bang on with estimates. That continues to be strong, and of course they've got the AI PC announcements coming later this year from that as well. That, though, not in this initial guide so much as that's coming in the next fiscal year for continued growth. I asked him about the growth in the automotive business, given that we've seen some weakness in EVs. And he pointed out that that's really different. EVs help accelerate the move to new platforms in cars, but it continues even as some automakers might get cold feet on EVs themselves, and their automotive business continues to grow strongly for them. Now, I'm going to be speaking more with CEO Cristiano Amon after the show. You can catch part of that discussion tonight at 7 p.m. on Last Call.
Yeah, stock higher, up about 4% right now. Really some strong commentary and numbers there, John.
Yeah.
Okay, so let's go back to the panel. Victoria, I was going to ask you about the Fed. I was going to ask you about the tapering of QT and what that means to the market, this idea of easing, as David just mentioned. But now I'm going to also ask you about Qualcomm, given what we've seen in the semi-stocks more broadly.
Yeah, obviously, first off on the Fed, I think it's more a reaction that they've lost a little credibility. It came out so positive, so upbeat, no rate hikes, everything's fine. You know, we're restrictive enough, everything's good. And then I think the market priced in and said, is it really? You know, you've been pretty wrong the last, 48 months. So I think some of this was just kind of repricing in how optimistic Powell was. On Qualcomm, it's a really pleasant surprise. After Skyworks, there was a lot of worry coming into this. It's estimated, they don't break it out, but it's estimated Apple's about 20% of their revenues. And we're fairly certain that numbers coming out of China and Apple iPhone sales were weak in Q1. So this is fantastic. And they've got a great point on the automotive. It's not just EVs. Everything has chips in it. That's why car insurance is so expensive now, because your bumper has a chip in it. You can't just bang out a dent anymore. You got to get everything recalibrated. So there is a huge pickup for them. And as we roll out more and more significant AI upgrades in phones, we could see then an increase in the replacement process, and we could see finally the cell phone market bottoming. All of those are positive things. They kind of came in with a little bit of weak expectations, and they beat a low bar, so the markets are liking it.
Okay. David, the fact that we saw that pullback in the market, that seems like it's sort of come and gone to a certain extent as well. I mean, risk on assets, is that still the place to be right now?
I mean, you know what I really liked in all this, Morgan, was the fact that he thought there were two avenues to getting a cut. That he said it could be inflation that gets it there, but it could also be unemployment. Sorry about that. And that really opened up a door. I'm not sure if that's when the market got excited or not, because I wasn't able to exactly time that in terms of being in front of a screen. But the point is, we could see inflation stay above 2. We could see inflation be a little bit sticky. And if the unemployment situation really deteriorates, they could start cutting. And Jay told you that today. To me, that's much more consistent with this view that we've put out for most of the year, that the Fed puts in place. If things get messy, they're here to help you. And they haven't been here to help you in 2022 and 2023. That was a real problem for the market, certainly in 2022, when we had the 25% downdraft or even a little bit more. So to me, the Fed really is much more balanced. If things get messy, they're here. I think he's very comfortable with inflation back down to 2.7, 2.8. If it grinds into 2, he's going to be okay with it. But if you really see something going wrong, we're going to get rate cuts. We're going to get something that helps us out. And you couldn't say that in previous years when he was fighting inflation at much higher levels. I think that's a very supportive backdrop for the market, risk asset market this year.